Wall Street often shows collective wisdom beyond any single analyst. Lately, a clear pattern has emerged between stocks and polls. Markets favor Trump. One hedge fund manager, Scott Bessent, explained in an investor letter that stocks return over 10 times more when Trump leads versus Biden. Bessent believes markets are bullish because Trump seems poised to take the nomination and presidency. In periods over the past 14 months when Biden led in polls, stocks returned a meager 3.4% annualized. But with Trump ahead, they returned 35.2%. Bessent lays out an argument based not on politics, but policy contrasts. Parts of Trump's tax cuts expire in 2025. Biden advocates repealing some or all, then raising rates higher. Trump wants to extend cuts at minimum and prefers lowering rates further. Biden has demonstrated a heavy-handed regulatory approach costing households thousands a year. Trump focused on removing ineffective regulations, cutting costs. The Trump administration streamlined or eliminated regulations that were duplicative, obsolete, or excessively costly while keeping appropriate safeguards in place. This regulatory approach provided significant savings for both businesses and households. The Biden administration also wields antitrust law more as a political weapon than as a tool to protect consumers, a deviation from more reasonable Trump-era policy. Rather than focusing narrowly on consumer harm, the Biden administration has advocated using antitrust law to address broad social and political goals unrelated to competition concerns. This blurring of lines creates uncertainty and chilling effects for business. Results have also differed on the world stage. For all the talk of Trump's bluster toward adversaries, they were contained during his tenure. While the media stoked WW3 fears, nothing happened. Major enemies and rivals like Russia, China, Iran, and North Korea were deterred from major provocations against U.S. interests. No new military conflicts erupted despite Trump's direct rhetoric and aggressive posturing at times. Russia invaded neighbors under Biden and his predecessor, but not Trump. Terror attacks resembling the October 7th strike in Israel did not occur either. U.S. allies felt more protected while foes understood clear red lines they dare not cross. Trump coupled bellicose words with caution and action, avoiding pitfalls previous administrations faced by seeming too weak, Obama, or too rash, Bush. His messaging matched policy for a balanced deterrence. From a business view, Trump's policies are clearly preferred. He enabled hiring, wage growth, controlled prices, and earnings growth through his tax and regulatory climate. A rare combination of tax cuts, deregulation, and firm but restrained foreign policy allowed companies across sectors to expand operations while keeping costs down. This boosted expected earnings and in turn stock prices. That let stocks rise as expected company earnings kept increasing. Trump also meant less uncertainty, important when business hates uncertainty. With consistent antitrust law and global stability, investment grew faster under Trump thanks to fewer unknowns. Corporate boards could make longer-term plans without worrying about abrupt legal or geopolitical shifts. JP Morgan's Jamie Dimon echoed this lately, saying he disliked Trump's rhetoric but agreed on policy substance and the economy performed well. Dimon judged by results, not talking points. Several top CEOs have indicated similar views, praising Trump's pro-business environment while avoiding commentary on his unconventional style and divisive messaging. Likewise, Bessent emphasized his analysis is investment-focused, not political preference. It's about conditions allowing businesses to prosper and boosting shareholder returns. For investors, bottom line impacts trump all else, and indicators suggest the market broadly expects greater earnings potential, thus higher stock prices, under Trump's policy agenda compared to Biden's. Wall Street's implicit blessing mirrors Main Street on the economy. It's understandable why. After 3 Biden years, average real earnings have dropped 4.4%. After Trump's first 3 years, they rose 2.6% and more later on. Households across Middle America experienced tangible financial gains from jobs, wages, and lower costs under Trump's pro-growth policies while feeling the pain of inflation and stagnant incomes under Biden. Bessent shows markets and Main Street are coalescing around one candidate this year for policy purposes. It's not about personality. Investors, executives, and everyday workers care more about results than rhetoric or style. Though Trump's bravado may alienate some, his administration oversaw strong financial outcomes for a broad base of Americans. With an election approaching, Wall Street and Main Street have independent yet aligned interests. Business drives market returns while economic conditions impact everyday voters. Through quantitative metrics and personal experiences, financial and middle-class Americans recognize the same conclusion. Trump's policies deliver. Now, with Biden struggling and Trump rising once again, Anticipation builds for November as the country chooses between starkly different records and visions.